Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview. I'm delighted today to be joined by Ami Daniel, who is co-founder and CEO of Windward, a company that provides predictive intelligence and big data analytics to stakeholders in the maritime ecosystem. And of course, what a better time to have Ami with us than today, as a lot is going on in the shipping sector, as always, but even more so in the last few months. And we look forward to hearing, Ami, your views on that. So thanks for joining us.
Thank you for having me. Indeed, a lot is going on.
Absolutely. Well, let me start with a broad question for you on the adoption rate. I mean, in general, what would you say today is the rate of adoption of the solutions that your company provides in the maritime sector? And where do you see that rate going?
That's a good question. I think the adoption, there's a very famous book from 1980s called Crossing the Chasm. And it's basically the Bible of how you build SaaS companies. It's really very famous. And Crossing the Chasm, they refer to the model of how industries adopt technologies. And there's the innovators, then the early adopters, then the early majority, then there's a big chasm, then there's a late majority. I think where shipping has traditionally been quite traditional, should I say? And I think that's changing now. COVID did accelerate that a lot. I still think it's strongly skewed by geography. Northern Europe is more of an early adopter than others, I believe. Western Europe is still more than early adopter than others. And I think Singapore as well is taking off a bit. I do believe that there's a lot of potential in the GCC area and specifically in Dubai. However, as you know, obviously, in everything that is concerning legal and sanctions and compliance and not just trading, there's still a lot of room for growth in Dubai and in the UAE, and a lot has been written about that. So absolutely look forward to a lot of growth in that market.
Okay, well, give us a couple of examples of what advantages the tools that you provide can do for shipping. What would you say are the top three? What's your top three in your sales pitch, if you like, when you approach potential clients for this?
Sure. So we work with multiple sectors. For trading, traders and tanker operators and dry bulk operators, we help them with anything regarding sanctions compliance and due diligence. So this historically hasn't been very important in the Gulf, because basically the policeman, if you will, was the US or the UK, and they haven't been policing that strongly in this area. Having said that, as of 2 weeks ago, the EU decided that sanctions circumvention on Russia is going to be a criminal offense in a criminal court of law in Europe. And I think that is going to make a really big difference, because obviously, as you know, many of the traders and shipping companies and wealthy business people in the UAE and more broadly in the GCC have properties in the UK or in Europe. And that means that they're exposed to that. So just by trading with Russia, you can end up being pressed charges against you in the UK or in Brussels or in Paris, right? So I think that's one thing. We've launched a few months ago a product line called Ocean Freight Visibility, which helps terminal operators, liners, freight forwarders, and cargo owners predict arrival of their containers up to 30 days out. And obviously, Jebel Ali is a very, very important port in the world. I think about 20% of the capacity go through Jebel Ali. And the freight rates are off the roof for containers, about 15x up, but reliability is down from 80-something% to below 40%. So with AI, we provide predictions up to 30 days. Last but not least, we work with pool operators like Navigate to help them just find more business opportunities for bunkering. So if you think of a bunkering hub like Fujairah, then customers use our technology to source deals and basically search and then have the phone number and call, hello, Mr. Owner of a ship that's coming in 3 days time to Fujairah. Can I offer you a great deal for bunker fuel? And obviously bunker fuel prices are up because of the price of oil.
That's great. I mean, as you said, no time like the present for companies to have the tools to, I suppose, minimize their costs, which are, exploding on so many fronts. And you mentioned the freight rates, and of course we've had the whole supply chain issues that were triggered by COVID and didn't resolve before we had now obviously the Ukraine-Russia conflict, and etc. The sort of ripple effects of that are all compounding. So I suppose that's good for your business, because the more people can predict or know where things are, the better. What about barriers to adopting your technology, Ami? Are there any cons in the sense of challenges still that need to be overcome for people to adopt that?
Yeah, sure. I think the main challenge is process and the capacity building. So we look at ourselves. We have a team of solution experts that help the customers build the processes around the technology. And I'll give you an example. One of the leading experts we have, her name is Chloe Deacon. She's based in the UK, and she used to work for BP. She was one of our customers. So in BP, when they adopted our technology for due diligence, she built all the processes for what to do with that technology. So let's say the technology tells you this vessel is high risk, this vessel is low risk, or this counterpart is high risk, this counterpart is low risk, right? Now what? Like, do you call the boss? Do you stop the deal? Do you stop the PO? Do you document it? So we, in the process of engaging customers, people like Chloe and our team of solution experts partner with the companies to help them build the processes around them. Again, I think the core and the crux of the issue here is that shipping and trading is historically a traditional area. So just bringing technology without a process doesn't really help you a lot, because what you're going to do with it, like, great, thank you very much. And I think we see ourselves as a partner. So in the trial of adopting it and testing it, we also help the people build the process of what to do with it. And even after acquiring the first subscription, we obviously want to grow with our customers. So we constantly help them grow to further use cases. So if you start working with us on compliance, then we're helping you see how the technology can also help you find new business. And if after that, well, maybe we have some insights as a service in terms of APIs. If you're building your own proprietary system, maybe we can help accelerate that and help make that more efficient and reduce the development cost and accelerate your time to money, basically.
Okay, and I mean, a lot of the digitalization argument is based on, obviously, the efficiencies are there to be taken. But one criticism or one challenge that industries come up against when trying to adopt that, whether it's your type of tools or others, is how reliable initially is the data that they're using, how clear or reliable is it to input, obviously, to get the results that you want. And do you think we are getting to the point now where companies who want to use these tools are making their data accurate or efficient enough to be used, if you like? Is there still a loophole there?
Yeah, I think it's a good question. First of all, I think data is a journey. I don't think there is an ending point in improving the quality of data as the industry educates itself. Then the expectations need to evolve. Now, let me tell you how we're approaching it. We think there's actually, the key is to create what's called a network effect. A network effect, by definition, by the way, the most famous network effect in the world is Facebook and LinkedIn. And I'll give you a quick example, Diala. The more people are on LinkedIn, the better the value, right? Because you guys are going to publish this afterwards on social media. And if there are 50 million people on LinkedIn or 200 million people on LinkedIn, you would want to publish it more if there are 200 million, I guess. Same with hiring, same with sales, same with branding. We're trying to create a similar network effect by allowing our customers and users not just to use our platform, but actually contribute data to the platform in automated manner. So the more people are using it, the better the data, the better the insights, if that makes sense. Because some of the areas we're working in are notoriously hard to track. Let me give an example. Who owns a vessel? So who owns a vessel? Indeed, there's a formal registry, but in practice, there's a lot of latency, i.e. it's late. So especially now with the Russia-Ukraine war, just understanding which vessels do Socomflot, the Russian national shipping company, own, and who they sell it to. And if you sell it, they sell it to a company in Dubai or in Cyprus, is that a legit company or is that not? That's like a constant struggle around the world. So the idea is we don't only put in analytics in place and processes in place and data science in place and algorithm in place, we also source data from our network and our customers. So the more people use the platform, the better the insights. And I can give you some examples if you want to, but I think that's the idea.
Okay, that's good. Yeah, it's kind of like two in one. And you mentioned the ownership of ships, if you like. Obviously, we've got the Russian oil issue at the moment. By all, we follow the markets every day, and there still hasn't been too much disruption in total volume to that. I.e., Russian oil is making its way somewhere, maybe not to Europe, but elsewhere. And in fact, as you said, a lot of exchange of ownership of ships, sort of dark, I suppose, operations are making that possible. And do you think that it's the US and the EU who've kind of placed sanctions on Russia so far? Do you think that they can, in fact, in any way prevent that, even by using intelligence tools, or is it a lost cause?
Well, I think the market needs clarity. I think right now, our team was in Posidonia last week. It's the biggest shipping conference in the world in Greece. And many ship owners, Greek ship owners, said, listen, it's just not clear to us what we should do or not do. I think in the first 2 or 3 months, the so-called moral sanctions or self-sanctioning did make sense, because people could say, listen, we're taking our own actions. But I think now is the time for clarity. Markets need clarity. Obviously, you've seen the stock exchange in the US. You've seen the pressures on the capital markets and the inflation and the interest rates, it's all combined. I think it's a wrong decision to have more unclarity in what people should or should not be doing. And please, mind you, there are still wind down periods in place. So I expect actually a big difference in the import of Russian oil. Now, sanctions is the right way to think about sanctions. It's a geopolitical tool that is an alternative to waging war. And that's why it's very popular, by the way, because the EU wants to push back on Russia trying to conquer Ukraine, but it doesn't want to lose European soldiers on Ukrainian soil fighting Russia, right? That's why there are sanctions. So by definition, it's a geopolitical tool, and therefore it is also we're starting to see a two-tiered world. So you're going to continue saying, I expect China, Pakistan, and India buy more and more oil from Russia. By the way, as many of them did from Iran still. However, the unit economics of that oil are a bit different, because you have a pipeline, Diala, from Russia to the EU. So it's very cheap to transport that oil. Suddenly, you need a lot more tankers to use that, because the distances are bigger, and that's what's called ton miles. You have more ton miles demand because you have more tons transporting. Sorry, you have more tons, i.e. vessels transporting more miles, i.e. distance. And considering the fact there are sanctions on Russia, a lot of Greek companies or European companies won't do that. So you're having a two-tiered market, and I think that will have an influence on the supply and demand and the balance long-term in the 6 to 12 months. So I don't think anybody will be choking Russia completely. However, I do think there's an impact on the trading and shipping companies operating there. Think of it like an insurance policy. Would you drive your new Lamborghini SUV, which is very popular in Dubai, I was there last week, without insurance? Probably not. So would you trade in oil, even if you're in the free zone, without the ability to understand who you're trading with? My answer is probably not. And again, this has been the most profitable year in history for the commodity traders. In history, right? So I think it's unprecedented completely, because these guys live in volatility, and therefore not having the awareness of who you're doing business with just doesn't make sense to me. Because instead of doing $100 million of profit, you're going to do 99 million, and 900,000. So, big deal.
Yeah, and I mean, what you mentioned, the insurance, and of course we've had also that insurance shipping is going to be sanctioned already. We saw a lot of self-sanctioning being taken up by operators and not going near any Russian ports, supposedly, etc. But of course, we've seen those insurance rates quadruple or more as well as a result. But also, there's talk about Russian ships or black carriers taking insurance from the destinations that they're going to, like India, like China, like those destinations. That's still so. Again, it seems that you said there will be an impact on Russia in 6 months' time, but in the meantime, Russia has quadrupled its oil flows out of its country. Its ruble has strengthened, etc., etc. We see no end for this war at the moment. So, from your point of view and your type of industry, is there any role it can play in that to move that forward?
Yeah. So again, let's take a step back for a second. Insurance is notoriously being driven by sanctions because it's very concentrated. All of the global marine insurance, 90% of the world's marine insurance is facilitated by 13, soon to be 12, group of P&I clubs. Most of them based in London and Norway. So from a political perspective, if you make them comply with sanctions, you pull the rug away out of the of people trading in terms of their insurance coverage. So I think that's where we're seeing it. By the way, it's also a bit unclear because they're allowed to insure vessels. They sell insurance for 1 year, but they're not allowed to insure Russian oil, vessels carrying Russian oil. But how would they know? So they don't know, right? They think I have an insurance policy for my car. I guess you as well. My insurance company doesn't know if I travel in my car to whatever, right? They don't know where I'm going. So now the insurance companies are obliged to start monitoring their customers, and I think that's complicated. That's one comment. Second comment, in shipping, part of the efficiency and the reason it's a very efficient system is the freedom of trade and the fact that any ship can go anywhere. And I think by having a state certified or state backed insurance like China or Pakistan or India actually doesn't allow for that free trade. Because let's say you're a tanker and you're just unloaded in your cargo in India or in China, the only thing you can do is go back to Russia and take more oil. You can't go anywhere else because you don't have insurance. Now, what happens if you have a broken part? What happens if you have a problem in your engine? What happens if you need to buy bunker fuel in Singapore? You can't. They won't sell it to you. So I think this creates, and it's similar to the situation NITC was or is still in the National Marine Tanker Company. And actually, if you analyze the NITC fleet, they've had a lot of safety problems. They had a lot of oil spills across Indonesia and across Israel. Maybe deliberate, maybe not, nobody knows. They've had a lot of safety problems, casualties, people dead, because they can't maintain these vessels properly. Yeah, because they're sanctioned. So I think these things take time. So I don't think there's a silver bullet to say no Russian trade. I think realistically, it's not going to happen unless China and India are going to stop, and they're not stopping. Yeah. However, long term, it's a global world, and I think the question is if the EU is going to enforce criminal sanctions, and we need to see them doing it, not just saying it, and they haven't done that yet. Criminal sanctions on shipping companies trading with Russia, I think you're going to start seeing a lot of people afraid to lift the Russian oil, because that means that if you're a trader based in Dubai and you have 5 vessels, right, and one of them lifted oil out of Russia once, you're not going to get your UK vacation this year because you're going to get to jail. And
yeah. So are we going to see a new, do you think, okay, and that's a gradual process, but do you think it could lead to, and it's kind of the same question we sometimes put to those commentators who are speaking about what OPEC is doing and where OPEC Plus may be going as a group. But do you think we're going to see a new sort of official market structure around sanctioned oil? Russian oil is being sanctioned. It will be beyond the war, possibly. There are going to be implications, not just going to go away. Iranian oil is still sanctions. There's no end in sight for that deal happening anytime soon with the US.
Yep, I agree.
Venezuelan oil, etc., etc. Can a new market structure operate in that way or not? From a shipping perspective, as you said, it's a global market. But could we see a new structure?
The question is, why do we need to see a new structure? I think already Russian oil and Iranian oil and Venezuelan oil is being traded in steep discounts. I think it's about $30 to $35 per barrel. So, and that's working. And I think nobody wants to put a formal structure on anything sanctioned because it requires structures, as you know, it requires consensus and agreement, and then you have politics and you have alignment. So I think it's much more comfortable for everybody not to have a formal structure for any sanctioned oil because still everybody's doing business. So if you pick up the phone and you want to buy 1 million barrels of crude oil from Russia, personally, I haven't done that, but I'm not, I assume it doesn't have to be too difficult. You probably call 5 commodity traders in Geneva or 10 or 15, and they're probably middlemen because you're always middlemen that, and it's a very brokered market. And I think that the FT also covered that recently. Because the oil markets are structured with third parties called commodity traders, it is quite easy to buy and sell any cargo you'd like, as well as obfuscate its location and its origin and its sometimes its destination. I think the main question we need to see here is how serious are the EU and the UK and the US and their allies enforcing it? Because if, again, we're going to start sea vessels like I think that it's called the Pega in Greece, getting apprehended by the US with Iranian oil on board. If you're going to start seeing that every week, I think it's going to change everything dramatically. If you're going to see just one Greek ship owner in jail because did one deal which is more profitable, all the rest are going to, I think, change their behavior. And I think that's still in the cards. I don't know if that's going to happen or not.
It'll take time to write. Let's talk just a bit about, before we run out of time, Ami, in terms of your technology on emissions, obviously on helping ships with their emissions, are clearly a big target. The shipping industry, although it manages 90% or so of the world's trade, relatively few emissions, relatively speaking, but nevertheless, it's still a lot. We've seen obviously the IMO conditions come in the last year or two being implemented well on the fuel oil, bunkering side, etc. But again, how can this predictive intelligence help on the emissions side of the shipping industry?
So first of all, let's mention that the EU pushed the adoption of the emission trading scheme last week. So the EU last week, the Parliament was expected to adopt the emissions trading scheme. It's going to come online, was supposed to come online January 1st, 2023, and it has been pushed. So actually, to my comment before on providing market certainty, if anything, certainty has just taken another step back. So I think that's important to say. That's number one. Number two, many of the carbon indicators. So let's just give a word on carbon and fuel. First of all, carbon and fuel consumption are one and the same. Basically, if you take the fuel consumption of a vessel, multiply that by 3.2, you get the carbon emissions. It's not very sophisticated. I think, however, from our experience, that even collecting the fuel consumption data from vessels is quite manual. So we've launched a program called Data for Decarbonization about a year ago, or 9 months ago. It has been awarded multiple awards, including by the Green for the Sea Award for the Initiative of the Year. Actually, ADNOC in Dubai, in Abu Dhabi, is one of the leading partners for that, and we're very grateful for them for partnering with us. And I think the idea is, can you build an AI platform and model to predict and analyze carbon emissions and fuel consumptions on a global scale? Now, through that process, we've learned that the basic building block, which is called noon reports, of every one of these vessels are collected manually. Or in other words, you have a crew member which is full of oil, and has been working in the ship all day, going down to the machinery room, taking a dipping the stick, and then taking a piece of paper and writing with a pencil the fuel consumption of a vessel. And we're now with bunker at $1,000 a ton, if you're off by 5 tons because you wrote it bad, you're off by $5,000, right? So what we've seen by collecting hundreds of thousands of these reports is actually they're very inaccurate. There's about 70, they're only 70% accurate. So just for even ship owners to know what's their real fuel consumption without waiting a year to consolidate all the reports, actually it's quite a challenge. I think what we're seeing is that, first of all, nobody really knows what they need in the carbon emissions industry. I'm well aware of Zero North raising $50 million right now last week by PSG and by AP Mono Mills. I think they're doing a great job, but I don't think they're really, I think carbon emissions is more of a second derivative of what they do. They actually have a great technology to help the captain drive the ship better and reduce the fuel consumption. So I think the way we're approaching it is we believe that we've built a capability to assess the fuel consumption of every dry and wet bulk vessel without human touch between the accuracy of 95 to 99%, which means the only thing you need to give me is the name or the IMO of the vessel and the period, and I'll tell you at a 98% accuracy how much fuel it consumed. And what we've seen is actually that can be quite helpful for many owners and operators, because they might have anomalies, they might have engine problems, they might have boilers which are actually out of tune. And by double clicking on that, they can actually pick up these issues and improve their fuel consumption, and thereby also collate their carbon emissions. So I think it's a journey. I think my humble opinion is the carbon emissions world and market is still not there yet. It's going to take a year. Actually, you've seen Cargill, one of the market leaders in fuel consumption, say that the CII index, the carbon intensity index, doesn't make sense. I agree with them completely. I think it doesn't make sense at all. I have no idea who wrote it. It's just a mathematical equation that just doesn't consolidate for some reason. And I think we're going to see a lot. So I think we believe that with AI, we can provide better transparency for ship owners and operators on everything in their fleet on fuel consumption, and as a derivative, improve their carbon emissions, because we believe that's the easier path to market in, again, quite a traditional market.
Yeah, and efficiency is the name of the game.
Yep.
I mean, just before we let you go, and that's very good to have that sort of perspective on what the best way to deal with the emissions problem. And it's certainly surprising to hear that your type of solution hasn't been used earlier, you know, in terms of that. We haven't seen that come to the fore.
It hasn't existed. We use AI to do that. Nobody deployed temporal convolutional networks in shipping before. So
yeah, which is quite a surprise given where we are with technology these days and adoption of those. One more question to you: what would be on your wish list as the next big tech solution in your field that you would want to see implemented, if you like, that isn't quite there yet? What's the next big tool?
I think I'm a big advocate of AI. You know, maybe we can put in notes here to the conversation. I've just written an article for the Forbes Technology Council on general purpose AI versus vertical specific AI, and in our case, maritime AI. So AI has been there for some while, but I think in shipping and trading, it has not been taken advantage of. There are many problems in logistics, in shipping, in tanker trade, in trading, that AI can make a really big difference. And I think right now, a lot of people look at AI as a project-based thing, i.e., hello, we're a big company, let's hire Palantir, you know, to pay them $100 million to do some project. And I think we're looking at AI as a product, not as a project, which means we've built a platform from MLOps, machine learning operations, to allow us to run hundreds of models in the cloud, not once, not one model. Every one of these models is powered by our data and can be powered by customers' data. And I believe that by having C-level executives talk about what's my $100 million problem, what's my $1 billion problem, what's my $10 billion problem, and how do I drive it with AI, you can make significant advantages and advancements. Specifically, we've deployed also for logistics. So this is how we have best-in-class prediction for arrival of containers. I think goes way beyond that. I think we can go door-to-door visibility with AI, taking into account also the trucking side. I think we can and should help terminal operators optimize, like Jebel Ali, their operations better with AI by queuing the vessels better and by organizing the boxes better. And I think actually for trading, you can find trading signals that way. So I think we're in the first steps in shipping and AI, because nobody's built a product. Some people did projects, and I hope that makes sense.
Great, and of course that would probably help to perhaps allay also the fear trust factor also in that, if you do a product by product as opposed to adopting it on a project-wide basis. Ami Daniel, thank you so much, co-founder and CEO of Windward. We run out of time, but thank you so much for joining us on Halftime Talk this week and for giving us your insights on where we're going in the shipping industry, the maritime ecosystem with predictive intelligence. Thanks so much for joining us.
Thank you for having me.